All right, good morning, everybody. Let us see what the market holds for us today. We have 5 minutes till the market opens. Look at the NASDAQ, Dow Jones, see how they all reacted from yesterday. All right, so let's begin with seeing how the market reacted yesterday and how they closed. As we can see here, the market, the prices did get support at the 50-day moving average, shown here by the blue line, the blue-green line. And on an hourly basis, three markets. All right, so let's begin with remove this oscillator. That's basically redundant, but it's for me to see visually easier. It's easier for me to see what's going on with the MACD. So yesterday we saw some pause after we hit the 9, change of direction on the momentum part of this setup. Again, we're using the sequence counter from TD Ameritrade, and the 9 and the 13s are the two numbers that we pay close attention to. For all the newcomers, the 1 through 9 is the momentum part of the signal, and the 1 through 13 is the countdown, which is trend-based. And this is where we can look for opportunities to fade established directional moves. So looking at the Dow Jones, the S&P, and again, this is what we discussed yesterday. We can see some support here at the 200-hour moving average. Again, that's also coinciding with the price and the timing indicator, so that looks to be pretty strong. And we'll go through. We have a couple more minutes before the market starts. Right. So let us get going here. All right. We have some news that came out this morning. Let's look at Cron. It's one of the pot stocks that we follow closely. Go. Cron is down roughly 70 cents pre-market. All right, here we go. The market opens, and let's see what we have. All right, so the market is now, the S&P is bouncing. And it looks like we'll probably see some digestion here of this recent downturn right in between the blue bar and, I'm sorry, the blue and the red moving averages, the 15 to 200 hour moving averages. And we'll see how far the buyers take us. Let's look at some of the leading stocks. Let's take a quick look. So even look in the 5-minute chart and see how the market is opening. Huya is a stock that we're following from yesterday. Been following for quite some time. Again, same deal here. Found some support, 24.75 as the setup concludes. And now we are going to see and try to anticipate where the next move is. And this setup, seller setup here, is what we're going to try to, well, the buyer is going to try to see if they can break it. And that could continue the recent trend. That's the hourly. And now this is the daily. And we are getting a lot of support right around the 24.75 area. Again, still counting on the negative. Until we break that, we can't assume that the change of direction will be here yet. So the only way that this will reverse the current negative countdown are two things. One is if this bar finishes higher than 4 days ago's bar. So 1, 2, 3, 4, it's got to come across and get above 28, or you can linger around here for a couple more days until we get another day or two, 1, 2, 3, another tomorrow, and eventually on the 5th day, which is 2 days from now, if it crosses above the close here and the lows here, then that will turn it into a 1 on the upside. So for now, the negative on the daily is still present. And on the hourly, if you're day trading this is something that you can get involved in at the 9 or at the 1, and you can day trade it up to 27.5 initially or higher, and you can put a stop loss somewhere around here. But again, it might not be the perfect place yet because we might not see a big move until it clears one of the recent trends, which is the negative trend on the daily. All right, you can take a quick look at some of the most actives as well, but let's take a quick look at the Volatility Index. This Volatility Index is, again, had some resistances yesterday, breaking above the $18 area. And we could see a little bit more consolidation, and that's pretty much aligned with what the market's doing. Let's see what else. We have the 10-year note. That's still on a negative downside trend. And we can find some support, probably somewhere around the 23 and the price level. And again, timing indicators show that we could have at least another 4 days to continue till we print in the 9. Let's look at some gold. Is down a bit from yesterday. with the fear coming out of the market. And crude is an interesting place where we can find the first momentum move here that brought us from the mid 50s to 60, and now it could be followed by our trend indicator, the 1 to 13, and that could give us a range back to 65 at the very least. All right, so there we have it, the main indices. And now we can focus on individual stocks or options. If anyone has any questions, feel free, say hello, say good morning. It's a beautiful day here in New York, and we're looking forward for another hour of StockQB and watching the market through our indicators, our timing indicators. All right, let's look at some of the big movers. Best Buy is moving. This looks very, very good. This has negated all the sellers here. And it looks like we're starting a new trend here. And as we can see, if we can hold this support level, the high of this range, if you can close above it and confirm, that will be a very, very bullish sign for Bed Bath & Beyond. This is has a very negative chart. And of course, we have to watch out for the fake breakouts. And as you see here, this happened on a weekly back in December of 2016, where everybody thought it could break out. But again, we were still working on these sellers that it never really cleared, even though we went above the 50-week moving average. So we can try to anticipate the same thing here. However, it is a little bit more exhausted on the sell side after printing a 9 and a 13. And so there's a misconception where the market's top and where the market's bottom. It's not necessarily on the top side where everybody sells. It could also be where there's a lack of buyers. And so we use this indicator to find out where there are exhaustion points on the buy side and the sell side. And same deal here. After all these selling, at some point there's a lack of selling. And that could bring the stock price higher, because if there's low supply and just a little bit of more demand, it doesn't have to have a huge demand. With supply and demand, you can see prices move higher. Let's look at other. Nvidia is another stock that looks like it's ready to continue to reverse this base that started back in November of last year. Very encouraging sign that as we try to break out, there could be a follow through of another round of buyers that can push us above this recent set of buyers. And if that's the case, then we can possibly anticipate the stock going back to 216. Places to put stop loss orders are either around the 169 area, or if you are a little bit more aggressive, long term, you can put it somewhere in the 155, 150. But that's more of a long term, and it's a different entry and different exit strategies. But for swing trade, if we can clear through the 200-day moving average, we can anticipate 216 on the upside and about below 170 on the downside. So that looks good on the weekly. So again, after this base, we are starting to see a possibility of completing a sell setup that could print this all the way up to 9, somewhere in 211. And as we can see here, 211, 215. So it is right around where the daily and the weekly will find some resistance. And the monthly, that's a new one. It's just starting out with another trend here. And we could see that again, if we can follow through above the 185 recent high and break above the 10-month moving average, that could bode well for the bulls. All right. Let's go through some of the other lists that we have here. Let's look at small stocks. Let's see if we can find any day trade possibilities or swing trade possibilities. All right, so this stock, Tosa Genetics, it's gapped up 16%. Looks like it started new. One of the things we have to watch out for are double tops. So here we can see that possibility 511 to break through here. And if it does, then we could possibly see this move higher and try to challenge that previous high. Bring this down a little bit more. That is one resistance, and that's the hourly. So you can see it's almost finished. The trend part of the indicator is almost finished. It can work together as long as we get the bars to continue to push it. On the 5 minutes chart, this looks very good. If you can break through the previous high of 468, then that is a possible day trade with some support. Initial support you can put here below that line. And again, the next level of resistance would be from 469 to 520. That might not be the perfect ratio, risk to reward. However, if it can continue to break through, again, we can possibly see it fill the gap back to the 7s. So no risk, no reward, but we have to keep looking for a better place to get involved, better entry point, so to speak. So again, we're looking to see if this could be a possible day trade. Truly not wise to day trade the first 10 to 15 minutes. I mean, everybody's different, but a lot of professionals don't trade the first 10 to 15 minutes in the market. It's amateur, pretty amateurish move. So we just want to see how the market, this is the 1 minute chart. And if you can see, the 913s are usually where the trends exhaust and pause and reverse. So it's a very interesting indicator. I've been using this for more than 10 years, and it is unique, and fortunately it's helped me and our traders here to accomplish over 300% in just 12 months in our portfolio. All right, let's see what else we have here. Look at some of these oil companies are moving. As we see, rig is moving a bit, found some support here. Earnings already came out, so it's very similar to the chart of oil. Swan, Southwest Energy, again, they're all trying to push over these resistance levels. NBev, Another pot stock looking to get some support just above the 200-day moving average, and now it looks like it's double bottom here, 1, 2, 3, and it looks like we can find some resistance here at 6 and change. So that's what we call a hot blanket. The 50 over the 200 is like a hot blanket on stocks, and you find some usually find resistance breaking above it for the first time. Usually tries to do it a couple times. What else do we have? Nvidia, these are the high volume. We have the highest percentage movers. Toes. Take a quick look at that. We're doing a day. So looking to find break out of a range. Endo International, some big news. This looks like it's moving in a 5-minute chart. Let's look at the daily. Daily looks good. This is the first day. It's breaking out of this double bottom rectangular pattern here. And this could go from where it is. It's already up 9%, 10%. And on the 5-minute chart, it looks like it's continuing to move higher. We have a little bit of resistance, 916. Once we go through that, then we're looking at 1147 as a nice resistance. So this is a trade where there's two places to put a stop loss. You can either put it at the bottom here or get a little bit more adventurous and come down here above 9.25. And I mean, that's the hourly, but if you want to go 5 minutes chart, yeah, technically you want to go down to 8.25, $8 as your support level. So if you're trading it, you put a $1 risk, and you will have a $2.5 upside. So that's 2.5 to 1 risk ratio. That's not bad. Things, stock moves can always surprise people. Can get to 12 and $13 here. So that is not a bad entry. So we'll keep that in our watch list so we can follow it. ENDP. Again, continue to follow us. Continue to let everybody know that we have a unique system that the big boys use. The Goldman Sachs is, the SAC Capitals, the big funds. We know they use similar indicators and not just price indicators. So we have our price indicator. Obviously, we have our price, volume. We have a couple of these momentum indicators, and we have a timing indicator to complete what we use here at StockQB. Does anybody have any questions? Feel free to ask me. Again, this is not a class, but more or less, we're going to discuss how stocks are reacting and how our indicators are reading them, and where the possible entry and exit points are, and where we can anticipate some of the moves. So this, XF, it's a little much. Apps, that's coming back down from a recent high. That looks pretty good. The hourly, it hasn't broken this. It did break it, did confirm below it, but now we have a new count going up, and so we have to respect that. Again, no indicator is perfect. Don't let anybody else tell you that there is a perfect system. However, this is one of the better systems that we've used over the last 15 years. I'm going to take a quick break here. I'll be right back in about a minute or two. All right, we're back. And let's see what we have here. Let's continue on. Let's go back up and see how the markets are up 231 points on the Dow, 83 on the composite. S&P is up 26. So again, I think the market it's still going to hold its long-term positive uptrend, and any downturn could be expected as a buying opportunity. I think from the weekly standpoint, just to help people understand, so as we can see over the last, we can go all the way back. I mean, let's go back to the 30s. Let's go back to the Great Depression when the S&P would have been at 4. Okay, we're at 2,800, so that's huge, obviously. So the last time, one of the characteristics that we're looking at, obviously, we're painted against this trend line, and it's something that could hold. However, we did go above the 20-week moving average, the blue line, and on a weekly basis. And when we see that, just going back all the way, I mean, there are some places where we could watch out. Again, this is same thing here in 2015, before the election. We did go above it, came down, but this was not a recessionary move. Okay, we were down no more than 20%. But let's look at the most recent recessions we've gone through. In 2008, we tried to go above. We were sandwiched between the 200-week moving average and the 50-week moving average, and so that's what we call the wet blanket. And the buyers just didn't have enough strength. Of course, we were going through anticipating a recession, so the sellers came in and really drove us below, or never gave us an opportunity to go above the 50-week moving average. So that's the last recession. The one before that, going into 2000, tech bubble, same deal. We never went above the 200-week moving, above the 50-week moving average, and there's just not enough buyers and too much sellers. So those were recessionary times. This is another recessionary time back in the 90s. This was a brief, small recession. And once we get above the 50 weekly moving average, the uptrend continues. So, and then before that was the 1987 crash, the October crash, Black Monday. And again, once we went above 50-week moving average, we were able to find our footing. So those were the recessionary times that we've seen. This is in the 80s, 136 to 100. So this was another bear market, and we failed to capture the 50-week moving average. But once we did above here, in third quarter of 82, then we resumed the uptrend. So, those are some of the historical points where we failed. I mean, there's still a chance here. If you look at the 70s, 73, where there was a fake out, going above it, and then rolling over. So I think there are two differences between the 70s. We have too much inflation, and Volcker had to completely eradicate that high inflation environment by raising interest rates. And again, interest rates are very, it has a huge impact on our economic cycle. When we raise rates, it's harder for us to borrow money. It's more expensive. When we lower rates, it's easier for us to borrow money, and it's conducive for growth. If we can grow faster than we can borrow, how much we pay for borrowing, then we have a positive economic cycle, and the opposite holds true. So in the 70s, we just came from a huge recession in the early part of the 70s, late part of the 60s, and high inflation really took a toll on the market. And obviously, it's different now, where the Fed said we are going to pause interest rates, which means that they are looking for the market to continue. So we will use any downturn in the market as a buying opportunity, and we'll continue to see where this leads us. All right, so we're up 234 on the Dow, on the daily, finding some support here. S&P. Let's look at what else. All right, let's look at some of the other stocks we can find. HYRE. HYRE. This is a good trending stock. It finished its 13 here. Earnings are coming out soon on the 28th, so that's in a couple of days. So that's one thing that could negate anything or start a new trend. So, but for now, we have a 9 and a 13. We can't really see the 9 up here. We have to change that color, something that's more visible. And why, for some reason, we can't see it. It's not as obvious. All right, so let's change that now. There's a sequence counter from TD Ameritrade. So for buy formation, let's look at, we get green. All right. And the sell, let's make it a red. Let's see how that looks. Did it work? Yes, it did. So we can see the 1 through 9 in the bottom. That's the buy setup. This is the 1 through 9 as a sell setup, and we'll change the number of our trend indicator. And with array. We'll make it dark color so it can stand out. Dark gray should work. The same thing for this. You can just see from the bottom. It forms in the bottom. All right, so here we go. So now it's more visible. So we have a sell indicator, a sell setup, followed by our trend line, and we have our another setup coming up here. So that's why it wasn't a surprise when we printed a 939 that we saw a bit of direction. Well, 939 is one of our setups that we follow also, alongside some of the price indicators and volume. But from a timing perspective, this is a setup that we closely watch. The same thing on a price setup. When we look at patterns such as head and shoulders or pennant formation and double bottoms, and all the other market patterns that a lot of traders use. So now we're looking from 939. That's starting another trend here. So we can see that conclude to 13, and then after that we can see where the next anticipate the next move is. CVNA, Carvana. This was one of our first picks. It went all the way back to this price point. This was a quick day trade, swing trade that yielded us from $12.50 to over $22 in less than 2 weeks. Use this for other things such as Riot. We've used this a few times. And you can see we've traded this a couple times in this area and this area, following the same strategy. And recently, we looked at some of the pot stocks and we were able to capture some of them here as well. All right, so let's see where this cron is. There's a lot of support here around the $18 level, 18 and a half. And we're waiting to negate, looking for where the price can negate here. This is a good sign that the stock opened low and now it's pushing higher. Look at the hourly. Oh, this is the, let's look at all the pre-market. All right. So from an hourly standpoint, there is a price support level here, right around the 1889 level. And from a timing perspective, as you can see, we want to see we want to check out the last end of the market, try to set up. This is where the timing indicator held this level of support. There are some rules that it's applicable. Technically speaking, this range of the 8 and the 9 could be applied on the bottom of the 8 to find the real true support of the timing indicator. But since the timing and the price indicator are both showing points of exhaustion on the timing side and support level on the price side, it looks like that's a pretty good support area. Continue and go up to some of the other. SMVK going higher. Yes, this is a recent recommendation at 1560. This was getting out of its base and now looking to fulfill. All right, we have roughly another 30 minutes as we start this new channel. And if you're watching on a replay, we are looking forward to see you on our next live event tomorrow, again from roughly 9:30 to 10:30. Upwork, this looks like it's ready to continue to break down. We hope it follows through here. Telray, again, this is still looking to get out of its own way. And Dev Hubs, let's continue to go on some of these high-flying stocks that we could probably see. Did put in endpoint here. Let's see how this works. So we'll wait to see if we can get it above this recent high. Okay. So let's look for the hourly. We want to see it break above the 915 to trigger an entry. That is a pretty big resistance, but we want to see it break. And that will coincide with breaking this recent high. So if it breaks above this recent high, then you can anticipate that you'll continue to see buyers come in as a day trade. Again, if you're day trading $1 for a swing trade or day trade, just put your risk, dollar amount risk that could be conducive to your trading. So if you're looking to lose $100, then you can enter it, 100 shares. I mean, this is for anybody. There's just a random number. You can go 1,000 shares, 10,000 shares, 100,000 shares if you're the big boys. But just to make it simple, easy calculation, if you buy 100 shares, risk $100 and $115 to be exact, and you can look for on a day or a swing trade for 2 points, 11 and a half. Can it happen? Of course, anything can happen in the market. Lived through the market since 2000, and obviously big historian. And again, I've gone through the Great Depression. As long as we can chart it, I've looked at it. So this is a possibility to trade higher. This is the daily. There are some resistance 10, 11, 10.94. So that's a place to swing trade it, or day trade, if you will. I'm not sure if that's much of a day trade candidate. SMBK. Seal. Let's look at this stock. It's okay. Nothing's coming out and really give us any more indication. ATOS. So this is rolling. All right, so it's still breaking, still consolidating. ADMA. We didn't look at this earlier, but as you can see, this has already began its countdown above the 205-minute moving average. And now it's at 9, and it looks like we can continue to see it go. Everybody's trading this. We didn't see this earlier. Can't possibly see everything. There'll be a little bit of resistance at 380 and then ultimately 404 to try to break that previous buy setup on the hourly. On the daily, this is looking to reverse. I mean, you can put a channel here if you would like. Channel, boom, and we can try to follow that. Some of you are wondering, why are we buying, or why would you buy something that continues to go, or it's still in a buy setup phase? Well, technically, you're looking at this recent set of buyers over here, and obviously these are the sellers with a setup under with a negative with a green count, and this is the red count, the sell setup. So as long as this holds, I mean, if you can buy it as close to this price point, the bottom of this $3, I mean, you went to 311, which is as close as anyone can hope for in a long-term or swing trade basis. So 1, 2, 3, 4, another day above 396 reverses this to the upside, or if we spend another day or so and we can close above 3.5 by tomorrow, that also puts it in a new trend to the upside. So, these are the parts of the point where you can anticipate things. As long as you hold this low of the recent sell setup. And on the hourly, we finished with a 9 here. So the first initial sellers are exhausted from the hourly standpoint. Now we've put this bar from 362 and the low is 341. So that's about 362 to 341. That's about 21 cents. And you add it to the bottom of this, it would be 320 something. So, this is probably where the shakeout began, and most people have gotten out. But if you had the foresight to see that it never confirmed, try to hold back again. And now we have the following upside on the hourly basis. So that's how we read using our indicators. It's one. So some of the things that trade. Let's get some volume up here. Look at Hexo. Best Buy, Chesapeake, high volume mover. Let's take a quick look at this. Same thing to the oil chart. There's a 200 moving average that they're trying to break. So that looks good. It goes above 340. You can see it follow through above. I mean, we're already starting to see it print above this one. So a few days have passed, and that's above it. I'll try to find the next one, which is up here, 471. Some other stocks. We have one's Huya. This is one thing that we're watching. This can come in as a buy here. The hourly it finished again. We want to see how it works around the 50 moving average and the 200 hourly moving average. The 1 minute chart, 5 minute time frame. All right, so it's trying to find some support areas here. Let's look at some other stocks. Higher DCAR. Let's look how this DCAR looks in our system. DCAR is holding above the 200-day moving average. This is a very good point of support here on a daily. 200 obviously is a good support, but on a price level, that's also a good support level. Again, it's hard to really tell on a daily at this point because it's still basing out. So anything above, any price above 1, 2, 3, 4, above this bar will constitute anything below it will constitute a negative number. Anything above it will give us a positive number. So because we're always looking at 4 bars, the 4 bars ago is always the benchmark for the current bar that we're looking at for the number to generate. So we're looking at an hourly basis here. So we've printed in a 9, hit the 200 moving average, very good support. Now this is kind of like a wet blanket. We're holding it at the prices. The good thing about it is that trend support, the trend the trend part of the indicator is almost over. So the sideways trend could be followed by another momentum trend, which is the 1 through 9, which is the buy setup or the sell setup. So once a 12, 13 prints, then we can wait for the next signal and anticipate. Oh, that's a 30-minute. But even in the hourly, it still finished at 9 here. And same here with the 7s. That's the sideways move. As long as it holds this bar, again, an extra print. I mean, this is the initial support, but if you want to be technically, don't want to get shaken out, you can apply a support level. You don't have to wait all the way down to this one, which is still high. I mean, still a lot lower, and that's a very big risk. But you can try to look for the support here and maybe just let it linger around 3.5. But technically it's positive all the way to still 320, but that's too much, I think, from an hourly even. Unless you're looking for a home run here, which could happen, of course. But for me, personally speaking, I would probably hold this area as a support level, and technically speaking, you have another point here as a support. Again, we're looking at the bar and mirror that bar to the bottom of this. So it's 406 to 366. That's roughly 40 cents. So 366, 326, right around here. There we go. So 326. If you put that 326, that could be the next level of support if this one fails. So if it fails at 367, you're looking at 326. So I figure you have a 10% move again to the downside if it fails it. Might as well wait for either it fails 320 or after it fails here and I get stopped out right around 350 maybe. Wait for the next bar to go up and redo it again. Doesn't matter if I got stopped before. It's like football when you're playing quarterback. If you threw an interception, forget about it. You got stopped out, forget about it. Wait for the next play to happen because that next play could be a touchdown. So you have to have a short memory when you're trading. You can't harp on the previous trade. Previous trade is gone, and there's not much you can do about it except to learn of find things that you could learn from that previous trade. That's all you can do. So the beauty is there's a lot of opportunities, and just have to keep it going. So the hourly here for DCAR, still holding for a swing trade if you're looking at it. So it looks good. 200-day moving average did act as a big resistance here. So looking at some of the indicators, momentum indicators, I look at them, but I don't focus on them too much. There are things that you can use to help you navigate through. For an example, let's look at the NASDAQ of the market. If you're looking at the market and it's continuing to go higher, let's look at this time frame. I mean, we're making new highs, higher lows. Everything's great. Our timing indicators are saying that this could be an exhaustion point. It was. I mean, these are indicators that, they're not subjective, they're objective. They print how they print, and we can't change it. We don't have to. It's different than than other technical indicators where it's subjective, where you can try to judge for yourself. For example, the MACD, we try to judge for ourselves. Oh, well, this is lower than this previous high, so maybe it's weaker, and it is weaker. However, it's still kind of, and then it turns around, and this is still now higher than this previous high right here, and you can think it continues to go, but it doesn't. It actually is the end. So, but you can also look at this is the high, and this is the longer term trend, and you pretty much put everything together. This is where it is useful for us, where the count is finished, and the MACD also suggests that this is a lower low than the previous high of the MACD. It's overbought. It's above 8 in the stochastic. So these are some of the points where you can say, okay, I can either sell all my position, sell half of my position, sell a quarter. Risk management really is probably the most underrated part of profitable trading. So if stock management is not your main focus, then it's pretty much a good telltale sign of how your trading results are. We are more focused on a process. We're more focused on the proper management of stocks because, again, nobody knows exactly what's going to happen in the future. Even indicators will fail. So when that happens, it really is up to you as a manager to manage your risks. Same thing with rewards. If you're getting too excited about a position, that means you own too much of it. You really want to have an even keel. Not one stock is going to make you rich. And you want to continue to, exercise proper money management and risk management in order to be profitable over the long term. So using that, again, going back to the same theory where the price is starting to come down. Here we saw the 9 and then 13. This move failed. And so as you find a bottom here, you're looking at some of the oversold areas over here. This is more of an ABC pattern, or 1, 2, 3, 4, 5 in waves. Waves are not our specialty. But from a weekly standpoint, if you're wondering why it stopped there, on the weekly, there's some support. at the 200-week moving average. On the Dow, same thing. The S&P, same thing. And we highlighted this in our website, StockQB.com, to look at some of our market calls. We are now doing a live call, so hopefully we can continue to show you guys how we look at the markets. So same thing here, 50-week moving average held support for the S&P right after we finished. Well, these calls really never printed. There's just not enough. The numbers really never printed. So if you're waiting for the next print, you could have waited for here. I mean, nobody's going to catch the very bottom. Nobody's going to catch the very top. It's very hard to do it. You need to get very lucky. And, it happens once in a while. And really, that's not the object of the game. It's not about getting at the very bottom or getting at the very top. It's really trading in between that makes you the fortune. So from this standpoint, if you're looking more to get back into the market, you look at the print one here. Obviously, if you are a little bit more sophisticated and you see that the market printed a 200-week moving average, I mean, you can be buying right there. Really control your loss if it failed. That's one great place to buy. But if you're more conservative, wanted for a better indicator to give you a buy signal, this would have been one here, the 1,913.9. And again, every time you see it right around the 9, there's a little bit of a pause in the market. You see 1 through 9 going up nicely. Then the 9 gives you a little bit of a longer pause after it prints. And then as it continues again to 9, like 13.9, now you have another market reversal going through again some of the price resistances and the timing resistances. You can see where we can anticipate a bit of a change of trend. And as we find some support here at the 200-week moving average, and now the 50 days coming back up. So it looks pretty good. We broke this resistance. We broke this resistance. We are now pushing above this support from a long time ago. Obviously, it's already discounted, but it's just good to see that it's going to, that these, I mean, they still have relevance. Old support becomes new resistances and vice versa. So if we can hold the market prices right around the 200, that should continue the uptrend. Again, even if you fail it and get back to somewhere around here, the last previous count, up here, I still believe that since we printed higher and the Fed's now realize that the market is very nervous with a higher interest rate environment, and they're reading it pretty well. And a lot of the big banks like the JP Morgan Chases and and Morgan Stanleys, they've called for a sell on a recent rally for this first quarter if the Fed doesn't stop in its tracks of raising rates. So they've paused and continue to pause and reiterated that we'll pause for this year. That should bode well for the markets in general. The 10-year, obviously, the yield curve, there's a lot of fear out there. And again, the Fed pausing tells you that the economy is slowing down. So these are all connected. So it's about 4 more minutes before we conclude our second video. Looking to gain some traction here. And we will see what else we have. If you guys have any questions, feel free to reach out to me, admin@stockqb.com, and continue to follow us, like us, send it to your friends, your family members who are looking to get an edge in the market. Again, we are quite unique from the rest of the trading community, and that's why again, sometimes you have to move against conventional wisdom. I mean, that's how you really make money. 90% of people don't make the money. It's the 10%, and hopefully having a unique system will bode well for some of you guys. S&P start to come down, but overall we're happy. 1 hour and hourly, after this rectangular pattern gets broken out, breaks out of this pattern, which also very, you could sort of consider as a pennant, but a little more rectangular. The pennant was broken initially here. This is the rectangular pattern. That's breaking out of it. And we can look for the next part, which is 17.5. And ultimately, we're looking for. So here's the number that we're looking for: 5, 4, 3, 2, 1. This is the number that we would like to see breaks of, because it's a recent IPO. This is SurveyMonkey. There were not enough numbers yet to count. So let's go back 1, 2, 3, 4. This is where it all started, right around 15, above this level, which is 1522. Let's look if we can get that 1522. Away and extend it to the right side. All right. So you have a rising channel with this line. Let's make this solid. That's a rising channel. Okay, within the rising channel. Oh, I'm sorry, we did break it. That's why we liked it. All right, so we broke that already. That's why we liked it at 1560. Right over here. Now it's above it. Now we're looking for the next print higher, which is 18.25 roughly. If you look at the hourly, we can go all the way back. So 5, 4, 3, 2, 1, right around here, 18 and change. That's the next. Let's copy this and then activate and move it above to this level. Okay, and quite frankly, if you really want to see where some of these divergences are, try to find some of them. Let's try this divergence. From the bottom of this, let's look at an extension of Fibonacci. Fibonacci up to this high, to this recent low to recent high, back to the low, 1605. So 1897 is the 161% Fibonacci extension, right around the timing indicator exhaust on the hourly. And that also points out to about previous high. So right around that area is a place we can get it, 23 on the 261%. So these are some of the tools that we use to anticipate where stocks move. All right, we have overshot our time by 1 minute. We thank you again for joining us. We are new, so if you're going to watch us through replay, we appreciate your time. We hope you find value. If you do, please like us, please follow us, and we will continue to bring you value the way we see the market here at StockQB. All right, thank you again, and we'll see you tomorrow. Bye-bye.